Hi, this is Lara at Elliott Wave Stock Market with your weekly analysis for gold, recorded early Thursday morning New York time after Wednesday's session for the 15th of May is over. I'm recording this video 2 a.m. in the morning, Thursday the 16th of May 2013. At the daily chart level, the wave count remains the same. Last week I was expecting downwards movement for gold. We've certainly got that. Last week I had a small narrow channel around this fourth wave here at minute degree. That channel is very clearly breached by downwards movement, so I've removed it. The fourth wave is confirmed now as definitely over. The fifth wave is underway, and it's likely to make a new low beyond the end or the price extreme of the third wave. At 1276, minute wave 5 will reach 1.618, the length of minute wave 1, within minor wave 3. So about that price point, I'll be expecting a deeper and longer lasting correction for a fourth wave at minor degree. That should last maybe a couple of weeks or so. But until we get the end of minute wave 5, the corrections should be relatively brief and shallow, lasting only maybe 2 or 3 days at the most. Use this channel on the daily chart to show us where the downwards movement may find support. Use the Elliott second channeling technique. Draw the first trend line from the high of 2 to 4, place a parallel copy on the price extreme of the third wave. I'll expect the fifth wave may end midway in this channel, or, less likely, if it gets down there, it should find support at the lower edge. While minute wave 5 is underway, no second wave correction within it may move beyond the start of the first wave. At the daily chart level, the wave count is invalidated at minor degree with movement above 1488.13. After we've had the ends of 3 and 4 at minor degree, more downwards movement to end intermediate wave 3 in its entirety. That will reach 4.236, the length of intermediate wave 1 at 1232. And when that's done, another longer lasting correction lasting at least a couple of weeks, maybe a month or so, and then more downwards movement for another intermediate degree wave. The target for primary C to end this big zigzag for a cycle degree fourth wave still remains the same at 1151. Primary wave C would reach 1.618, the length of primary wave A. Let's have a look at what happened last week on the hourly chart, where the start of minute wave 5 within minor wave 3 up here is just off to the left of the chart. So within the downwards movement, we had a series of overlapping, we still have a series of overlapping first and second waves. I think we may have just passed the middle of the third wave. So we have minuet or green 1 and 2 off to the left of the chart, and within green or minuet wave 3, we have subminuet 1 ending here, subminuet 2 here, and within subminuet wave 3, we have micro 1, 2, and micro 3 is nearly complete. Within microwave 3, we have submicro 1, 2, and submicrowave 3 is now a complete structure, so the middle of this third wave should now be complete. Submicrowave 3 is $4.10 short of 4.236, the length of submicrowave 1, a bit of an unusual Fibonacci ratio, but it is mathematically correctly a Fibonacci ratio, and that variation, 4.1, is about 7.6% off, and anything less than 10% I consider acceptable. So we already have a ratio here between waves 1 and 3, so we may see a ratio for the fifth wave, but it's not as likely. So calculating a target for microwave 3 to end would probably be best done using the ratio between 1 and 3 at micro degree. At 1357, microwave 3, beginning here, would reach 1.618, the length of microwave 1. When we get down to about that point, and that point should be met this week, we should expect a small fourth wave correction again, further downwards movement. We're not going to expect to see any deep and particularly long-lasting corrections, nothing over a week or so for a while yet. I am expecting price to step on downwards with small fourth wave corrections along the way. When we have the end of subminuet wave 3, the following fourth wave correction should last maybe a couple of days, maybe 3 or 4 days at the most, and it can't take price back into subminuet wave 1 price territory above 1441.48. Sub-minuet wave 3, I had a target for that and we've already passed that target. The target was 1.618, the length of sub-minuet wave 1. It's past that length. It's getting really close now to 2.618, the length of sub-minuet wave 1. So I'm not really expecting to see a ratio for this third wave at sub-minuet degree. And if that's the case, then we will expect to see a ratio for the following fifth wave and either the first or third. So when I have the end of sub-minuet wave 3 and 4, I'll use those ratios to calculate a target for you for minuet wave 3 down. Last week I was expecting downwards movement for gold. I expected that if we saw a trend channel breach of that upward zigzag labelled minute wave 4, then we could have confidence in the downwards targets and expect price to continue lower. We certainly got that confirmation and price has continued lower. It's not over yet. I think we may have just passed a strongest piece of movement within minute wave 5, and now we should see continuing downwards movement with a series of small fourth wave corrections along the way. That's all for me today with your gold analysis, and I hope that everybody had a fabulous day.